Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by SecuriCentrix. SecuriCentrix is a trusted cybersecurity company with offices in Dublin, Cape Town, and London. SecuriCentrix provides expert advisory services, primarily in the finance and fintech industries, with tailored security solutions to fit your specific needs and regulatory challenges. On the show this week, we've got
I'm Nigel Verdon. I'm the CEO and co-founder of Railsr.
Nigel is a three-time fintech founder focused on building great ideas, first with Evolution in the 1990s, followed by Currency Cloud a decade later, and now is CEO and co-founder of Railsr, formerly Railsbank, since 2016, who are empowering a new generation of embedded finance experiences. In this episode, Eoin and I riff with Nigel on the foundational experiences that pushed Nigel towards becoming a fintech founder before the word fintech even existed, the rebranding of Railsbank into Railsr, the impact of Railsr's $46 million Series C funding round and spending it on the right things, Nigel's view on the digital asset market, and the difference between starting a startup and scaling a startup, all right here on Money Never Sleeps. All right. So Nigel, welcome to the show. Awesome to have you on.
No, thank you for the invitation.
It's great. You've been a stalwart in the fintech industry for the last couple of decades. So it's awesome to have you on for this chat. And probably a good place to start is maybe just share a couple of the foundational experiences that you've had that have gotten you to the point where you are right now. Yeah.
It's really the frustrations of if you come across something you feel that can be solved, being able to, and then building a business around that has been a challenge of myself. I do like solving problems as a trained engineer and got two engineering degrees. And that sort of mindset is always sort of inquisitive and trying to solve things. And also I found working in large companies, I'm probably not the best sort of employee in larger companies. It's best to go and find something where you can actually make change and do something that helps other people or other businesses in their journeys as well.
Yeah, definitely. Had you been an employee of a company for that long before you started your first startup?
When I left uni, I was at a company called EDS, which was a big services business owned by General Motors at the time. And that 2 years was good training, actually, because they put us through a particular training program like Accenture used to have, or Anderson Consulting, as it's called in those days. And that experience, I think, actually, of the rigor and the discipline, etc., and the processes that large companies tend to have, successful large companies have, I think was good and foundational. And then working in the financial markets, basically a buddy of mine, Johnny Peacock, who's a co-founder of the first business, he was also at EDS, and he phoned me up one day saying, I'm leaving to go to a company called Goldman Sachs. And I'd never heard of these people. And I said, you got a great job here working in lovely Luton. And I said, look, for the same engineering maths, they pay you 20 to 30 times the money. So I then went and joined Emira in the fixed income business there, and then the Swiss bank came after that. So it's a sort of a transformation into, they are large organizations, but in the capital markets businesses in that time, you didn't really feel you're working for a big company because each trading desk was pretty much like an independent business. And it was very sort of entrepreneurial, especially Swiss bank, which is today called UBS. And we went through the whole transformation that fintechs really doing for the sort of the non-capital markets world. We did that in sort of early 1990s when this thing called the internet appeared, and looking at how you use tech and how you use that to engage with the customers. Very simple things like an FX salesman could be much more effective using Slack. It was revolutionary at that time to handle 5 or 6 customers when they could beforehand just on the phone handle one customer at a time. So it's just seeing how you could leverage tech. And we were I think the second biggest customer of Next computers because of the dev advantage, and now become the IMF essentially. And that gave the teams massive advantage, especially on the FX options floor and the Chicago Board of Trade and others, where the traders are all given flip charts essentially of the surfaces that you're trading on. And so if it looks like this, buy. If it looks like this, sell. Okay. And so that was revolutionary. Today, it's probably people think that's quite archaic. But to do all the pre-compute stuff and having a dev environment that was called OpenStep, which is the dev environment on Next, was a completely different way of writing software and everything than the traditional ways were at the time. So thanks to Steve Jobs, he revolutionized that even in the mid to late 1990s.
Wow. And then your first startup from that point was Evolution, and that was 96, yeah?
That's correct, yes. And then Evolution, I was working at Swiss Bancorp, and I said my colleague earlier on was working at Goldman, and the four of us co-founded it. One from who'd just been setting up the equity derivatives business of ABN AMRO. Simon and John both came from Goldman, and I came from Swiss Bancorp. Was because this internet thing appeared, and at Swiss Bancorp we did the very first foreign exchange trades on this thing called the internet. And so we built a business around it, helping front office of capital markets firms utilize the internet for price distribution, customer engagement with fund managers, automation of trades, it's a straight through processing of trades, etc., using what's now is prevalent in the industry, a thing called FIX, Financial Exchange Protocol. And so that was a sort of a great company. We built about 120 odd people and then sold it eventually to BA Systems on FTSE 100. But it really capitalized on, instead of building websites, is actually building the capability to trade between organizations, not just to have websites.
And that was all based on Fix, yeah?
Well, it was on Fix and various other pieces. One of the projects was the very first FX options pricing tool that was delivered over the internet to customers so they could self-price the option structure they were looking at. Beforehand, they had to phone up the sales guy. The sales guy would go on the internal tool and then give them back a price, and they just enabled it. Did a similar thing with the insurance world they made their tools available to their customers. Okay. And it was a real sort of, how do you scale up your business and get it front of mind of your customer? Whereas beforehand, it was very much a telephone-based business.
Gotcha. And then after, like you said, you exit out of that to BAE, Currency Cloud in 2007. What was the impetus for getting that started?
I was dragged into, after I left Evolution, I was dragged into the equities business of Dresdner Kleinwort, and Dresdner Kleinwort Investment Bank, as called at the time. A colleague of mine ran equities at Swiss Bancorp, and he needed somebody to come in and help him turn around the equities business. And so they took a whole bunch of ex-Swiss Bancorp people to help. And that we turned around from a 90 million loss business to 150 million pre-bonus, profitable business pre-bonus in 18 months, because it was they were doing stupid things basically. And markets went up, so we rode a bit of the market going up as well. But when I was there, I met a guy called Sean Park, who you probably know, who founded Antimis. And Sean set up a business within Dresdner Kleinwort called Digital Markets. And we basically had created the machines and everything that did all the flow trading for equities, FX, government debt, corporate debt, listed futures, listed options, and brought that all together. And there's a sort of amalgamation of tech guys and trading guys, ops guys in one unit there, rather than they all be split apart. And that was essentially the precursor of what became Antimis and what essentially became Currency Cloud.
Wow.
Thinking of it, because if there's a video Sean did, which is called Amazon Bay, which is looking at the markets. And I remember taking me into his office and going through the script that was going to be Amazon Bay. And it's actually quite a legendary video now.
Okay. No, I've never seen that. I got to check that one out. We'll tee that one up for the show notes later on. Great. So your experience in a collaborative effort with working with a few folks that was Digital Change Partners in 2015 to 2016, and the whole Railsbank idea came out of that. Can you tell us about that a bit? Yeah.
We were advising a bank in Luxembourg about how they could leverage their infrastructure and make their pipes, the pipes which there was a sunk cost with them, to make money out of those pipes. And those pipes are like connections up to SWIFT, connections into local payments, etc. And the project didn't go anywhere. In the end, the board didn't sign off on it. But what we were trying to solve for was every fintech that had been built sort of in the 2011, 2012 onwards, that sort of initial when the fintech and moniker appeared in Q1 2012. So TransferWise, Revolut, Currency Cloud, all these others. Everybody was building the same infrastructure and spending 12 to 18 months doing that. And then we could start going to customer. So we thought, well, why don't we shorten that cycle by building the infrastructure, which is where we went to this bank, got the infrastructure, put an API layer on it like we did at Currency Cloud and make it available. So we, instead of working with that bank, we set out to build an API-led, essentially banking infrastructure business to accelerate fintechs. And then the market's grown because it's more than fintechs. It uses into marketplaces, all sorts of different digital-first companies. And that's essentially where it all came from. It was a failed project to bank.
That's the thing. I know back in my days in operations and capital markets, I came up with this great idea called Blade, which was the business logic algorithmic data engine. And it went nowhere. It was a fantastic idea, but definitely a failed attempt. And tell us specifically about Railsr, what it is and why this is really the source of your conviction as to the perfect thing for you to be working on.
So we call it an embedded finance experience platform. And what that means is anybody who wants to put a financial experience into their customer journey and embed it into their brand, their journey, basically using APIs as opposed to white label or sort of white label thing. It gives you the control and the tools and the Lego to build banking, wallets, cards. Now we've got rewards and also credits as well. And so suddenly you've got the ability of something that took, say, Marks and Spencer's building the Marks and Spencer's bank, which is something like several millions of dollars, and basically was rebadge HSBC, so you inherited everything that's bad with HSBC in your UX. Enabled anybody at a much lower price point, much quicker. So it wasn't a 2-year project. It was a 2 to 3 month project to embed it. So it really sort of democratized access to putting finance where you've always wanted it in your user journey, or business models like wage stream, wage advancing. They prototyped on us in about 4 days, had a working prototype, and then launched in 2 months. Whereas beforehand, that just wasn't available to people. They'd have to work with a bank, get a banking partner, all the different pieces, and the angst going through that. Whereas it was sign up with us and go. So a lot of inspiration came from Amazon, the AWS business, because when we set up Currency Cloud, we got data center, we had rack space, we had to buy computers, we had to buy routers, we had people to manage those. And you're a few million down before you've even started running your platform. Amazon, it's your credit card, 15 minutes, and you got a data center, and it's a few $1,000. And that is the inspiration for Railsr to be able to do that. So data center is just financial products. So where we've seen it sort of going now is that not just fintechs, other businesses want to engage with their customers using finance. And why is finance important? A, to make revenue out of it. B, you get data on what your customers are doing, and you get more data, especially in the retail world, in terms of where they're going, where they're shopping, what sort of things they're buying. And so what was just to help fintechs is now expanded out to something that pretty much any brand that wants to engage better with the customer can use finance strategically now, where it was vastly expensive. The other advantage we allow people to run experiments. So going back to the lean startup way of doing things. Beforehand, you either had to, say, go with HSBC to do your white label bank, or you had to go with a big card implementation and spend a 5-year contract. One of our customers, Sainsbury's, literally 3 months, built a prototype, tested it with customers, which was basically looking at open looping the Nectar card and making it a spendable device, and was able to get data and decide, right, this is a project that we're going to go small in scale. So another side effect that we discovered as we built Railsr is allow customers to prototype. like they've never done before. And so you're freeing up a large company to be able to like do the Amazon $2,000 on a credit card almost to do something that they can then take data, they can then get the capital allocation internally to be able to build product.
And Nigel, I was going to say, your career spans, I suppose, fintech before it was fintech to a degree, but a lot of it obviously is that infrastructure piece. So I suppose, it seems like a natural almost progression to the point now at Railsr that you understand the pain on that side in terms of infrastructure and the pipes and the plumbing piece, and you're taking that pain away from the customer like that, being able to have someone prototype something in a short space of time without the massive expenditure. I presume, like, obviously there's huge opportunity then for that to scale, given you're able to do that at speed for companies in lots of different sectors.
Sure, it's also giving commonality across different regions because the infrastructure is different everywhere you go, or different payment methodologies or payment schemes, etc. And so what we set out is again, inspiration from AWS. AWS is pretty much common around the world, even though your data rate and your processing may be sitting in Luxembourg, so not Luxembourg, in Frankfurt or in Dublin or San Francisco. So we really did set out to give a common API, hide all the complexity, hide that you had to know industry terminology, which is not very exciting or interesting to people. So you could do a very simple thing, which is issue an account, receive money into that account and send money from that account programmatically and do it super simply and consistently, whether it's on euros and SEPA, whether it's UK and UK faster payments or BACS or SWIFT or whatever the different sort of bank transfer mechanisms. And then took that to cards as well. So cards make it super simple. Issue a card, spend money on a card, and then you control a card with like reset PIN and other functionality. And what we saw was the industry was so complex and frightening to people to engage with. It's sort of, people thought, well, it must be expensive or it must be exclusive. And so democratizing it through simple APIs, that what we call human-centric design. If you issue an account, we'll call it issue an account. If you call it send money, rather than saying that's a UK faster payment or that's a SEPA, whatever, step 2 payment. I don't care this one, I want to send euros from A to B. That's what your API does. So that's where I think the other value we give. Now everybody's got APIs now. And the art of the API we learned at Currency Cloud is that my original CTO, that guy, Nick Borner, who's worked with all the way back to Swiss Bank, we both sat in the same trading floor, was the thing we cracked, probably partly by design, partly by luck, like everything, is creating APIs that people understood how to use, even if you weren't a developer. Because you can realize it's cool this, if you hook these things together and give them good Docker, you can get functionality out. And you free people up, and then lots of other tools were available after that to be like Postman and everything else. And so suddenly this API economy we were part of that, just again by luck, rather than just that we were so forward thinking. No, we just thought it was a cool thing at the time.
Is it any kind of, you make your own luck, right? But right place, right time, right industry, right stage of technological development in the world, where your inspiration and the ideas that you wanted to pursue for the financial world, that the technology was available for you to do that, right? When I think was it Elon Musk? No, it was Mark Cuban that bought broadcast.com back in the 90s, before broadband was actually available for streaming, right? Imagine if it was. How would that have looked different? And was it that, did you have to force this at all in terms of, or was it, hey, the technology's there, we can creatively assemble it in a way that is actually going to create tons of value? Or was there anything that like I said, like that you did have to force?
No, there's not so much about forcing it, because we just thought about, well, Twitter's got an API and tons of people can use it. Why can't finance be like that? That was the general thinking. And so we just created an API layer and then figured out afterwards, how do we connect the banking industry infrastructure up to our API? So what we launched in Currency Cloud was basically a stubbed out API that two people we'd sold the idea to. One was called TransferWise and one was called Fitzgerald. And the guys behind Fitzgerald were very old personal friends. So they wanted multi-currency accounts at the time. Said, "Oh, we can do that via an API." So we gave them an API. They thought, "That's fantastic, the API." And we thought, right, now we've got to figure out how to actually build it behind the scenes. And we had a vague idea, and that sort of the fact that the customer liked the proposition and liked the fact that they can simply integrate an account into their existing infrastructure without talking to the bank or going to all the technology that banks have, which are like file transfer type of stuff, batch processing stuff. They love it. And so that then inspired us to actually go and build out the back end of it into Barclays and into SEB for the FX rates and stuff for Currency Cloud. And ourselves in Railsbank we built initially on Starling Bank and Credit Mutuel in France, and then we moved directly to clear directly with the Bank of England and clear directly with some European central banks. So that sort of knowledge which we learned in Currency Cloud, we basically just applied in Railsr just for different use cases.
Got it. Makes a lot of sense. Now, obviously, you're at a different stage now with Railsr, and that you've just recently completed a big Series C of $46 million. And with that being 26 million in equity and 20 million in debt, right? Last year you raised 70 million. The year before you raised 37 million. And, with any raise that you do, especially a big raise, that the hardest thing to do is to spend it on the right things. Do you think you've had any takeaways from the last one that would, maybe the last one or two that might inform how you deploy this Series C of 46 million, especially with a part of that now being in debt? Any new challenges that presents?
Sure. I think it's the current world and markets and macroeconomic conditions and everything really need to focus the mind, especially because we'd expanded over into Singapore and Australia, and we've been closing those businesses down because the investment returns were looking far too long out, and we needed to double down in UK and Europe. So we're very much investing in UK and Europe and just improving the product and making some of the processes, etc., more robust. I think in this downturn market, it's a good opportunity to look back and say, what are the things that need improving behind the scenes? Because we're growing so fast, we let some processes be less than optimal. It's now time to invest in those processes so you can make things scalable again. So bizarrely enough, it's a downturn can also be effective at focusing your mind on the right thing as well.
Okay. Yeah, because we typically hear that once you hit Series B, you realize what you built isn't scalable and it's held together by bubblegum and sticky tape, right? And that you need to actually spend some time, rebuilding. And that, at Series C, that continuing to iterate on that. Do you ever find yourself now, even still, and I know this probably happened when you're in the capital markets, but that where, you've got a great big plan on doing something at the infrastructure level, but then a big new business opportunity with perhaps a big new customer comes up and there's specific things that they want, and that then derails your own strategic build, and that where you put the customer's bigger needs on top of that. Is the Railsr business at a level where you could have one big, perhaps new revenue opportunity priority cause you to kind of take other ideas take a back seat?
We built the portfolio of customers. So our largest customer, and it's only about 6 or 7% of our revenues. And so the reason for that is what we learned in Currency Cloud, where we did that a little bit, was you've got to build a feature that is, and the mantra of product companies is you build a feature that majority of the market will use. And we're very lucky to have he's joined as Chief Product Officer, we've just been promoted to Chief Operating Officer, is Stuart Gregory, who spent 6.5 years at TransferWise. And TransferWise is a very premier product business. They super focus on a feature that solves problems for their customers. And they use a lot of the data from support tickets, all these type of things, that if we improve this, we get a big return for the customer, and also it cuts our support costs down massively. And so that's the mindset we've got into. We very much focus on These are things that are super impactful because customers always ask for tons and tons and tons of features. When you actually look at the usage of features, you'll see it skewed up to only 20% of the features have the massive usage. And having that tail feature, intuitively you might think that's going to close the sale. It won't. The usage will be over here. That's a real nice to have and go on the roadmap. And part of the art of also in the product company is having a clear roadmap that's very driven by feedback. Because we think we can sit around the table and think these are the absolute killer features. Everybody love them and want them. And we launch them and you've paid a lot of investment into it and nobody uses it. And that's the mindset. When you start the company, you've got to sort of be like that, have a bit of a vision, and you've really got to switch the mode as the customer drives everything. And it's not just the customer who shouts loudest, it's looking at what's the pain points for really solving for you, and keep doing that and doing that again. And that's a sort of a switch, coming back to your Series A, B, and C sort of questioning about where things change. That's a real switch to after sort of Series A. You've really got to get into not the temptation to go into, oh my God, there's a big revenue opportunity here, all pass over there. You've got to keep going your slow path going forward, because one of the big fears is the sort of bear hug client. That is sort of 60 to 70% of your revenues. And I think Square is a massive business, and Marqeta, their biggest customer is Square. But if that went, that's massive systemic risk. So we plan that lots of customers, generally you can service the market because you're focusing on everybody as opposed to just one customer with quite unique needs.
Yeah, I guess longevity breeds consistency, right?
And in the same vein then, Nigel, have you, because obviously you're at the business is at a different stage now, would you say the skills that you've needed or that you need at this point as CEO are very different? Have they grown or changed? They have changed obviously, but how has that change been in terms of the skill set from, the seed Series A mindset to now a Series C, and a very different mindset and skill set, I presume, as CEO? How have you found that change?
You've got to let go and let highly competent people just get on with their job and try not to meddle, because it's when everybody's there around sort of seed and Series A, everybody's hands sort of pumped doing everything. You're reviewing legal contracts, you're coding, you're getting on and testing the latest feature and everything. And so you've got to step back, that you've got highly competent people to get on and run their business, run that part of the business, build that part of the business. Just got to have an agreement of here's a direction. And while you think you can do everything to, like if something's not going right, you've got to give them the space to get their way as opposed to your way. So it's a different way of looking at things.
It is. It pales in comparison, as Eoin mentioned before we got on air. We were both at the Irish Seed Fund launch event that Middle Game Ventures had, and they had Aidan Corbett there, the CEO of Wayflyer. And they're obviously, they went through right up to Series C in the matter of 3 years. They moved pretty quickly. And given that their product, which is, are you familiar with Wayflyer?
No.
Yeah, they have this great Trojan horse, which is an e-commerce analytics platform. And that once that's embedded, that they use the data there to determine the risk profile of these businesses and whether or not they want to lend them working capital, because that's one of the biggest needs of e-commerce companies is working capital, because of the gap between the supply side and the demand side. So they only launched in 2019, 2020, I think. And what the founder said, who they're clearly still thinking of a Series A type of mindset, Aidan Corbett, was that your job as CEO is to go stick your nose into what everybody else is doing. Because if they're not doing it your way, they're doing it the wrong way, which is obviously pales in comparison to where you are right now, where, you've built the business, scaling it now, you've hired some really smart people that you want to just, you hired smart people for a reason. Right. But an earlier stage company may not yet be at that point where they've hired a whole bunch of people to be able to run the business every day. Right.
It is. It's got to be, as I say, a business that runs every day. And that's where you've got to start building and take a step back, as I say, to rebuild some of your tech stack as well. So,
yeah.
But the good thing is if you've got a good engineering team, we're lucky to have some very good engineers. You don't have this sort of release once a month type of mindset that you get like the Google and Facebook and everything. You've got multiple releases going out every day and incremental features going out. So that's, and being able to do that in a financial services where it doesn't matter if Twitter fails, your tweet doesn't go out. It doesn't materially change the world. But if you lose your money, people get fussy on things. So it's a good rigor that the guys have on the platform for that.
Let me take a minute to tell you more about our sponsors. SecurityCentric strives to be the trusted partner that secures your information assets deemed critical for your business. SecurityCentric also delivers the highest level of security expertise and support to their clients. Even further, SecurityCentric provides independent cybersecurity assessments and advisory against best practice industry standards and compliance frameworks. Working as an extension of your team, SecurityCentric helps you recognize and control data risk to your business by understanding your level of risk. In short, SecurityCentric provides many solution offerings from assessment and advisory, managed security services, cloud and infrastructure validation, vulnerability management and testing, and payment security. Get in touch with the team at securicentrics.com to learn more, or email info@securicentrics.com. That's SecuriCentrix.com. What do you think is harder, that early stage of getting the business started, the 0 to 1 phase, or the scaling phase?
Scaling is way harder. 0 to 1's relatively easy because it's relatively easy. It's getting something out there and getting your first customers is I think easier than scaling. Scaling is a lot harder.
Yeah. And well, they say 95% of companies do not make it to Series C, right? So, once you do get to that, you start scaling obviously at A. And so you're going to stumble between A and C most likely. And there you go, because they either sink or they get acquired. 95% do not make it to Series C.
Wow.
Yeah.
I didn't know that.
Yeah, absolutely. So,
Nigel, a question for you, actually, because we might as well use the chance while we have the opportunity to talk to you. We, on a podcast recently, myself and Pete were talking about, it was fundraising round by Nova Credit, which is a US company, connects into credit bureaus. And they took in some money from HSBC, and it got us thinking about fintechs as a kind of public utility. So, Railsr is probably a really good example. Your embedded finance solution you've about 300 customers or something. At what point do you become structurally important to an industry? And I'm thinking of players like yourselves and bigger players that you almost need to stay in private hands as opposed to strategically aligned with one, bank or one financial services company, because does that take away from the value then that you're bringing to the entire industry?
It's a good question. I think it's better to have private investors, and so we have a couple of banks on our very small slices on our cap table. But I do think independence is good because it doesn't skew your thinking. Plus, if they decide to actually exit that business, and banks have a strong reputation of exiting businesses, that leaves you high and dry. And we found this at Currency Cloud. One major US bank loved us, and we were doing lots of our payments infrastructure, about to port our FX over to their liquidity. And suddenly a spreadsheet said no, and they decided to exit this business. And so we learned that sort of the hard way of being dependent on somebody, even if they were a strategic investor. So I think independence is useful, and hence that's why we've gone directly to the Bank of England, directly to Visa, directly to MasterCard, directly into for euros as well. Although we can operate with a third party under it, like we do in the US, because the regulatory environment's different. And that independence, I think, does give us some control of our own destiny. And if we can control our destiny, that means we don't impact our customers. Because that US bank pulling out meant that TransferWise basically lost their payments, but the payments runs that had to be ported very, very quickly to another provider. It had massive impact to TransferWise on a couple of days. And we can't do that at Railsr. That was back at Currency Cloud.
Gotcha. That makes sense. Shifting gears a little bit, and this came from going down a bit of a Nigel Verdon rabbit hole before this interview and trying to figure you out, okay? And seeing that you mentioned earlier about Lego blocks and that you've got a Lego block that is AWS, and with Railsr trying to make the layer on top of that, the financial layer on top of that, a bit of a Lego block. And I am a student of fintech, a student of decentralized finance, crypto, and blockchain. And I was looking for something having to do between Nigel Verdon and digital assets. And I had a hard time finding it. And, but I did read your thoughts on the metaverse. And, the point I'm mentioning this is that because one of the biggest topics within DeFi is composability. Is this ability to build on top of others and others build on top of you, and everything being open source and being able to go to GitHub and get it and actually then build on top of that, and that everything only gets built once and others just build on top of the same thing. So I did read your thoughts on metaverse, on NFTs and buying digital goods and metaverse experiences, right? And I saw that, and you stressed a couple of times in that post the important role of real money in metaverse. And Eoin and I were talking about Meta's metaverse earlier this week with a bit of a tongue-in-cheek moment on Meta's metaverse mess, and seeing how they're bringing that in as a bit of a private closed metaverse. Okay, and hearing you talk about real money in the metaverse, I can obviously understand your view, and obviously the context of when you were talking about that, I think, was in the matter of being at a conference, right? So it makes total sense. But given your positive views on the potential of crypto and the middle ground on regulation thought that I saw you share in City AM with that letter that you did, what about giving your customers who are maybe pursuing a metaverse strategy that ability to conduct commerce in crypto assets? Have you thought about that much? So much of the metaverse is driven by gaming, and in gaming, there's monetizing in-game rewards. There's ability to offload those. All this stuff is very nascent, though, and that it's early days. But any thoughts on that area?
One of my concerns is, say, there's a big sort of movement that, say, Bitcoin and crypto, or Bitcoin, for example, will solve the international payments. The numbers, the FX trades about $7 trillion a day institutionally. I think there's about 350 billion of liquidity or something in Bitcoin globally. Half of that's lost. So they just don't have the liquidity and the path to more liquidity to service that type of market. So there's that side of those areas, I think, is a reality. But most of our customers at the moment have really wanted just raw money, simple things of money. And we've talked to our CTO about, for example, one use case we're looking at is funding credit card receivables. And at the moment, you normally got to get a warehouse credit line. You've then got to fill that, and then you take it to asset-backed securities market, sell that paper out. And it's quite a cumbersome process, and it's only open to a few. So you've got to be like Sandals. You've got to be an experienced person to get the line. To get the line, you've got to be an experienced person. So it's quite difficult. So we're looking at DeFi networks of liquidity pools, being able to place a single credit card receivable in a liquidity pool somewhere. And at the moment, the infrastructure's there. There's various pools you can connect up to. But I haven't seen, we've got to wait to see some of how these, say, liquidity pools on the DeFi networks go through massive crashes, for example, and these sort of black swan events, because I think there's massive potential because you can disintermediate the capital markets and by going direct to the consumer and consumer pools that align to a certain risk, and they'll buy that receivable. I don't think we're there yet. I think there's lots of great experimentation. I think Bitcoin has been a phenomenal, I call it an experiment because it's also a tradable digital asset, but there's nothing backing it, but there's volatility, so people trade it. But when you're sort of connecting things up like central bank, so real money from central banks and others, and making that digital, this whole 10 years or so of experiment, I think it's going to pay massive dividends, because they've seen some downturns in credit crunch. They've seen the current markets are probably even worse than credit crunch. And so especially when, say, volatility has gone nuts and so Bitcoin.
Oh, yeah.
So I think I'm a big, massive supporter of it, but it's still early days. It's like when Mosaic came out for the crowds, for those people who don't remember Mosaic. And I've never
Mosaic,
seen
yeah, no, Mark Andreessen, obviously. And now where is the bulk of Andreessen Horowitz investing going?
it's DeFi networks and
Yeah,
stuff.
absolutely.
So, yeah, and you've got to be that 10-year ahead brave from investing in it to take it somewhere. So, and I was actually lucky enough to meet Tim Berners-Lee the other day. And
Oh, cool.
I thanked him for his work in the 1990s.
Tim Berners-Lee, folks, for those who don't know, the individual who we can all thank you for creating the internet, right? Or the modern day.
So I think we're on a cusp somewhere with this DeFi world, this whole NFT thing has just been caught as a name, but it's just really a contract that's
I've heard people refer to it, whether others like it or not, as a backpack of data on a token. I prefer it more as a secure data container on a token.
Yeah.
But I think Bitcoin, like you said, Bitcoin park it, right? Bitcoin is its own thing, and I think it's going to stand the test of time as its own thing. You've got the rest of the whole crypto asset space, and Ethereum being obviously a key tool in network utility. And the ability to build on top of that, the composability that Ethereum offers is significant. And I think what I've been seeing a lot of is what we call the DeFi mullet. So fintech up front, DeFi in the back, right?
Yeah.
Like business up front and party in the back, right? I never had a mullet. So and where it's crypto rails in the back, and it's not generally anyone trying to move Bitcoin, it's stable coins. Yes. It's USDC. It's issued by Circle, who, from all intents and signals, seem to want to become a regulated financial institution. It's just whether or not the SEC will allow them to do that, or not the SEC, but the U.S. regulators in general. And I think glad to hear that you've got this in the corner of your minds, and that you've got an appreciation for the space as well, because it's.
I think so what they've got to get over is there's not really these sort of evangelists that blockchain will change the world.
The maxis, the Bitcoin maximalists. I mean, Nick Carter from Castle Island Ventures took a whole bunch of crap in the last few months because he kind of disassociated himself from the Bitcoin maxis, just because it's too toxic and it's too volatile, right? So it's a wonderful first incantation of a crypto asset. It's fantastic, and it's totally decentralized from day one. The group that was Satoshi Nakamoto, not the individual, but the group, thank you, because the world needed that. Whether most of the world says thank you or not, like they do to Tim Berners-Lee, but I think we're in a good place.
And if you also look at this whole, I think, fear that the regulator has of decentralized, nobody owns it, all this type of thing. I think if you look at the infrastructure it has, which is the ability to essentially create a transaction, you've got the history in it, and therefore, especially say if you've got central bank digital currencies, because you've got all the provenance and you've got the history, fraud and money laundering it suddenly becomes quite difficult.
It is.
With that, because you've got the sort of regulatory payload as part of, you could call it part of the NFC, whatever. But I think it has huge potential. But it's got to get over the fear that they think it's people trying to destabilize countries.
Yeah, I know. We talked earlier, again, before we got on air, about Chris Adelsbach, and shout out to Chris. He's a friend. And he said last year, after your $70 million raise in 2021, he said, I speak to dozens of founders every week, and I've rarely gone through a week where a company doesn't tell me that they are working with Railsr. Obviously said Railsbank at the time, but can you talk about the benefit of having someone like Chris on your cap table?
No, Chris is great because he's both an investor and an ex-operator, and he deeply understands companies, and he deeply understands entrepreneurs' mindsets, and deeply understands his philosophy of who he invests in. And so he's a great sounding board, a great networker, and he deeply understands how to work with founders to get better outcomes and not be judgmental and stuff. So he's quite a unique person, and it's great he's in Europe. There's quite a lot of Chris Adelsbach in the US, but having Chris here, even though he's American, but he's living here, he's in Europe, he's in the ecosystem, was fintech angel investor that top voted. Was it last year or the year before?
Yeah.
So for the ecosystem, I suppose it's good also getting Tava in the ecosystem now, post transfer wise. And I know the colleague Steve Lemon, for example, is at Currency Cloud, all coming in as ex operators, and it sounds like yourselves as well. They come out of there, because one of the observations of the European venture world is there's a lot of ex fund managers and ex corporate financiers, ex accountants, and everything working in that ecosystem. Whereas there aren't enough founder-led. We've got Atomico as well, that's founder-led. But I think the US has that real founder mentality within the money, because they've made the money, they're now reinvesting and also taking the 10-year vision, where some of the other funds don't really have that long a vision. So the Chris Adelsbach is the sort of person we need in Europe in this market. Superb guy.
Yeah, he definitely is. We definitely need more of him.
There's another one. Michael Jackson's another good one. If you know him, he used to be the COO of Skype.
Okay.
The whole lot of angel investments, and in the crypto and DeFi world, he's very, very active.
Definitely. All right, cool. We're at the point of time in the podcast where Eoin Fitzgerald likes to ask his favorite question that we ask everybody at this point of the podcast. Yes. Nigel, Eoin, would you like to go ahead, please?
Yes, I do. Nigel, tell us something people won't expect to know about you.
One, I'm an Irishman. You won't pick that up from the accent at all. But I also work on mentoring the English rugby team. And I work closely with Will Carling on that. We're trying to, because the rugby players post-rugby, they aren't looked after in England. They are in New Zealand. They have a whole thing called the network. And Will's now setting up the England network. It's the best copy. The guys have done it really well. And so rugby's been a passion all my life. I never played any sort of high standards or anything, but it's more the philosophy behind it, the fun behind it, the engagement. So that's something like an Irishman advising the English team.
That's awesome.
Very cool.
That's awesome. And have you ever hired any ex-rugby players?
Yeah, I have many times.
Very good.
Claire Green, one of the original people in Railsr, had 35 caps for England in the women's team.
Wow.
Awesome.
It's very cool.
We have all the ex-Irish rugby players investing in fintech. So, well, not all of them, two of them. Rob Carney and Jamie Heaslip are both investing in fintech here in Ireland. I see Rob Carney kicking around Elkstone Partners in the last couple of weeks. So they're doing pubs as well. So, gastro pubs as well as investing in fintech. No better combination, right? Very good. Well, listen, Nigel, it's been a pleasure having you on the show.
Absolutely.
Really great conversation, great chat. You are a mountain of knowledge and an awesome combination of fantastic experience in the startup scale-up space in fintech. So thank you.
Yeah, thank you for the time, and hopefully see you. I'm in Dublin next week at SaaStock. So if you're around,
very cool. Yeah, we'll definitely drop in there. Thanks, Nigel.
Thank you.
That does it for this week, folks. Thanks to Nigel Verdon for opening up his mind to help us figure out why he does what he does. Links to get in touch with Nigel and learn more about Railsr are in the show notes on our website, moneyneversleeps.ie, so check us out online. Also, thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3. If you'd like to talk to me about your business, drop me a line on info@moneyneversleeps.ie. Finally, till next time, thanks for listening. See ya!